let me introduce myself. So my name is Monty Metzger. I'm CEO and founder of LCX. That stands for Liechtenstein Crypto Assets Exchange. That's where the little flag comes from. And we are a regulated crypto exchange, diving into all sorts of blockchain use cases, including tokenization, which we are talking about today a lot. And we gained 9 registrations according to the Blockchain Act in Liechtenstein, which is a legal framework. We will learn later a little bit more about it. More about myself. I'm an entrepreneur since the 90s. I started my first company back in 1998, programming websites. I'd been on the entrepreneur side for many years, sold a company, been on a VC side, so run a venture capital fund. And now I'm back in the entrepreneur scene since more than 6 years now. Moved to Switzerland, incorporated in Liechtenstein, and we're now moving into the next growth phase of crypto and blockchain.
Hi, my name is Thomas Nägele. I'm one of 39,000 Liechtensteinians. I'm a lawyer, that's my profession, but I used to code software before I became a lawyer, and I still do that. So I try to build a bridge between technology and law, and I started with Bitcoin in 2011. I wrote my PhD about tokenization, about the legal nature of token and how you actually need a proper legal framework to tokenize. And I was part of the government work group of the Liechtenstein government to come up with this legislation you talked about, the TVTG, where you can get licenses or registrations. Actually, it's not a license, it's a registration. But it also has this, this framework for tokenization. So I'm really happy to be here. Thank you very much for having us. I'm looking forward to our talk.
Yeah, same here. So if I can ask everybody either to grab a seat, if I can close the door as well. And we're going to start with this conversation around a cryptocurrency exchange. And then we're going to talk about the rules and the requirements and how some of them are breaking them around the world. And maybe they don't know what rules they're breaking, but anybody heard of Binance? Raise our hands, okay. Anybody heard of Gemini or Coinbase? So you've built a cryptocurrency exchange. How do you do that?
So first of all, maybe from the history, I'd been an investor for many years, and we discovered Bitcoin 2013. But as a regulated venture capitalist and investor, we were totally sidelined. We couldn't invest because there were no custody, no rules, no regulation, and we were just afraid also when we talked to the regulators, how can we do that? How can we tap into this new asset class? Nevertheless, we kind of followed it. And when I discovered this new legal framework where Liechtenstein really became a role model in terms of establishing this new legal framework, I said, that's so interesting. We need to establish a key infrastructure player, an exchange. And we did it now the last 5 years in a very hard way, because we always ask one more question. We did more what's called know your customer investor.
But doesn't that cost you business?
It cost business. It slowed us down. It was got me a lot of new gray hair because it's not only to get the registrations but also to keep them. And there I have to say, some countries in the world like El Salvador step up and say, like, we open up, but they come from a very bad reputation. Liechtenstein has a very high reputation, AAA rating at Standard & Poor's. They have to protect their reputation, and that's why we stand for this crypto integrity and really try to do it the right way. And now we see this turning point where some other unregulated players are under pressure, closing down, and it's now it feels like it's a time to shine for us.
So I'd like to now coming over to you, Dr. Token. You were the co-writer of the Blockchain Act there in Liechtenstein, Blockchain Tokenization Act, if I recall, in January 2020. You were in it before anybody really knew what it was, at least from a regulatory standpoint. You had to build or help them build the framework.
As Monty said, to get a registration and keep it, it cost them some gray hair. Look at my gray hair. I think I have a little bit more. So to come up with a regulatory framework before anyone else did it in that way we did it, it's a very comprehensive regulation that cost us time and a lot of gray hair, I think. We started 2016, and back then in 2016, there was no regulation around like how to run a crypto exchange properly and how to do tokenization. So the Liechtenstein government and actually run by the Prime Minister back then, Adrian Hasler, created this work group to think about regulation. And the first question you should ask yourself in the technology space is, do we need regulation? Because innovation, because regulation always also hinders innovation, right? So it's not good if you regulate too much or too early. But the idea was, okay, we analyzed the technology and identified actually two major things. We said, on the one hand, we need to protect the consumer, right? So we need customer protection. And on the other hand, we said we need to foster innovation in that space. This rather simple thing is to regulate service providers, right? But the more challenging way was, and maybe we talk about that a little bit later, is the tokenization part, a little bit more in depth, because that's that was the holy grail, to come up with rules how you tokenize something. And tokenization is, you have a piece of art, you actually create a token, and this token, if you do it properly, this token represents ownership right to that piece of art. And that's quite unique globally. That's, as far as I know, no other jurisdiction on planet Earth still nowadays has that framework. But for the service providers, and that actually comes back to your starting point, we said, look, if people are using these kind of technologies, which actually started in a way where they said, we don't need intermediaries anymore. Remember when Bitcoin started? It was the answer to the financial world, right? They said, we don't need intermediaries anymore. So sometimes people ask themselves, like, why did FTX ever happen, right? That crypto exchange crash. That was a service provider. They did nothing else than another.
That. How did that happen? I mean, was there just this rush in of greed to make money that they weren't asking the right questions of Sam and his team?
I think that, like, first of all, there's not only one FTX, right? And I'm not an insider, so I don't know. I have only from public resources. But first of all, there were many of these companies. And secondly, even if you come up with regulation, and the best regulation you have in place, whatever, you get a service provider registered or licensed. You look at who is the shareholder, who is behind it, what business model they're going after, right? But no regulation is perfect, right? We have a lot of examples outside of that specific space, the blockchain space, where regulation did not really work well, right? Think about Wirecard in Germany and the German BaFin, but there are endless of these examples. But you have to come up with sensible rules, I think, to if a service provider starts to do their business. So I think if we would have a proper framework around it and a proper supervision, maybe that could actually have been stopped earlier, right? I don't know if it still would have happened, but I think regulation is a good answer to that.
So in your new book, Tokenization, how are you welcoming the world into this? I mean, it can be a little complicated, and it seems to be all these intricate details. So how did you see it when you were putting together your book?
That's right. So I'm here in Davos. I'm launching this book, Tokenization, the $1 trillion asset revolution. And it's really about the next growth wave of the industry. And the reason why is, first of all, like, what is tokenization? In my definition, tokenization means putting a physical asset, issuing a token, and putting that on the blockchain. Meaning that every real-world asset, from a painting to diamonds to real estate, could be tokenized, and also financial assets. So we tokenized for bonds, for example, and put them on the blockchain. We've seen some other financial institution doing that. And if you look at the derivatives market, for example, there's $600 trillion market. Imagine 10% of it would be tokenized. It is 10 times, 20 times bigger than the current cryptocurrency market. And that's an opportunity, I think, for a lot of jurisdiction, also for Greece, to step up and give access to real-world assets on a global level. Because what tokenization does, it is bringing our accountability to the players. It brings accessibility so everybody can participate. And it brings transparency to a new degree.
So is this like fractional ownership, or how does this work, Thomas?
The thing is, you can do a lot of things, actually. You can create fractional ownership. So very simple example, you have the Mona Lisa, you tokenize the Mona Lisa, and then you issue 1,000 of these tokens, and then you have a fraction of the Mona Lisa, right, as ownership. It's actually co-ownership. But you can also say, look, I have 10% of the value of Mona Lisa. So there are different ways how you could do that. And to add to Monty's point, it's not only that you create that you make it more secure and easier to use. And I think what is really also very interesting is you can make a lot of assets which are at the moment not transferable, easily transferable, you can make them bankable in a way, right? So a lot of assets which are at the moment somehow not digitally addressable, they become addressable. So think of all of your assets you have at home. You could actually tokenize all of these and then get a loan from your bank, and you collateralize that loan with all of your small assets, your watch, your piece of art, your whatever, right? And then you create an insurance token around it. So that's why we always talked about this vision of the token economy, where we use tokenization to digitize our economy, right? And you said it well, like other countries are at the moment. The European Commission did that from 2018, right? Looked at what Liechtenstein did, and we have all of the resources open and online and accessible for everybody, so others could first of all look at what we did, but also tell us what we did not perfectly well, and hopefully we get better and better regulation in that space, because that's what we try to do, right? We paved the way and started now with others, right, to work together, so and learn from others as well, but also tell others our experience we had, right?
Maybe a very practical example that, because to show you how future thinking this legal framework was, back in I think 2018-19, when the working group started working on it, they invented a new role for tokenization called the physical validator. And this is now one of the registrations, and LCX is one, I think the only one currently holding that. We're very proud of that. And we used an example explaining it also to the regulator, which is diamond tokenization. And so when you tokenize any asset, and let's look at the diamond as an example, for example. If I say this, we have one diamond which is tokenized in a token, so there's one representative which is the ownership right to this token. How do you know that the diamond is actually mine? It's not borrowed from Thomas, it's not stolen from him or something like that. So there needs to be a role, like a notary, who's liable and who's guaranteeing that the underlying asset is free of debt, it is insured, maybe like kept in a secure vault or with other legal protection. And that's exactly what we did with the diamond project. It's called Diamonds, tokenized diamonds. And there we basically made sure that the diamonds are in a Liechtenstein vault, high security vault. They're insured, and we made sure that they're coming from a trusted source. Everything like that. And then with the legal role under the Liechtenstein framework, it gives investor protection to the people who buy this token, the ownership representative of the diamond, because they can go to court in Liechtenstein and enforce their rights. And it's the only country in the world who had been that future thinking of how to unlock this powerful new era of tokenization.
Thomas, so what should the corporations be looking for when they're looking for a partner for tokenization, or they're looking for a cryptocurrency exchange? What are the types of questions should they be asking?
I think first of all, you should choose your jurisdiction wisely. And we talked briefly, like we obviously I'm fully biased. I'm from Liechtenstein, but I'm the chair of the board of INATPA, which is a European association. So if you look at what Europe did with their framework, I think you first have to start to check or to identify what business you are actually creating and which services you want to provide and which products you want to launch. And then you have to choose your jurisdiction. And I think that's the biggest first step, right? Because you need this legal certainty. And we saw that in our country, like entrepreneurs were searching for it. They were searching for answers, right? That's and I think Liechtenstein provided a lot of these answers. And then coming to your question, you not only, if you try to create an ecosystem, and I'm in that space since 2015, we launched the workgroup in 2016. If you try to create an ecosystem, you need advisors, you need tax advisors, you need banks. Like for that industry, it was a hassle for years to get banking, proper banking. And then if you start to think about, like nowadays it's quite easy, right? A lot of advisors are very experienced in that space and you can talk to them, right? But in the beginning it was very hard, because this new, like whenever a technology is very new, and we talk now about blockchain, but try to talk to your lawyer about AI, but like have a more than like just 3 seconds discussion about AI and how he uses ChatGPT to create his travel itinerary, right? But if you really want to have an in-depth discussion with a lawyer, that's hard, right? But that's the way how things are. It takes time for everybody to get experience, to learn it, right? And I think that is coming back again. I think it's such an honor to be here at the Greek House, right? I think we should start to work together, to learn from each other, to learn from the experiences others had, right? We had a lot of challenges, and we found some solutions, but we do not have answers for everything, right? So that's for me the invitation to everybody, right? Start to collaborate in these new areas of technology and the uses of technologies. I think that's makes the most sense, right? And we are very open to these kind of discussions.
So with the SEC in the United States recently, I don't know if they necessarily gave it their full endorsement or stamp of approval of Bitcoin. They should at least created a new opportunity globally, and the United States included as well. So where do you see your business being impacted now with the ETF being approved, at least giving investors around the world a little more, I guess, safety in that this is here to stay?
Well, how I see it is really a tipping point for the industry in terms of growth, because this is where mass adoption could come in. It gives a lot of people who had not been exposed to Bitcoin a way to buy into that asset class with the ETF. But what is even more fascinating for me is really that we had been proclaiming Bitcoin blockchain regulation since many years, as described before. But US had been kind of blocking it all the time, and still are, like with enforcement by regulation by enforcement. And now I do see all these regulators stepping up and explaining Bitcoin to the audience, on TV and everything like that. So they are now becoming our voice in terms of marketing the innovation part. And if you think of at a blockchain overall, it is a new technology. And what we've seen in the next 5 to 10 years is really that we will make it, or success will come, if we don't talk about blockchain anymore. Like we don't talk about HTTP internet anymore, or Wi-Fi. It's just there. We're just connected. Everything works. And that's how the technology evolution will be there. Now it's like innovation with blockchain, but at once everything will be on the blockchain. Everything you can imagine will be tokenized. And it just works on a global level. All the financial systems right now are inefficient, different silos. And now it's the question, who will be the next big player?
So how safe then is this blockchain, and how many blockchains are there?
I mean, first of all, the question is, what do you consider being a blockchain? Then you can start with, okay, what is a permission blockchain, a permissionless blockchain, right? What is a blockchain like the Bitcoin blockchain? That's maybe the one most people really know, because most people know Bitcoin. But then you have Ethereum, right? And then on Ethereum, you can issue your own cryptocurrency, you can issue your own token, but that's not an own blockchain. But what you can do with Ethereum, you can basically fork it and make an EVM compatible blockchain, right? So you can use some resources together. So that's a very complicated question, right? I think I have no clue how many blockchains really are out there. And if you include the permissioned ones, nobody knows, because they don't even might be public, right? So if you have, so for example, in 2019, I was part of a group helping the Stock Exchange of Thailand. That's public information. I was helping the Stock Exchange of Thailand, and there we discussed a lot if it makes sense to use a permissionless blockchain, so everybody could use, or a permission blockchain. And so there are a lot of discussions around which blockchain to use and what is a safe blockchain. And that actually brings me back to the core of our law, because there we came up with a new term which we call trustless. Actually, we call it trusted technologies, because the definition of what a blockchain really is very crucial, right? And I wrote my PhD about it. So if you are interested in reading really boring stuff, go to my LinkedIn profile and read my PhD. But please do it when you really have nothing else to do. That's boring legal stuff, tokenization at its core. But this is the crucial question, right? And there's a lot of research now done globally. So there are researching teams in Korea, in Europe, in America, working on what is a blockchain, what defines a blockchain, what is a sufficient level of decentralization. And to give you a very simple example, nothing starts fully decentralized. Whatever project one person or a group of persons launches is at the beginning very centralized. And then it starts to actually a lot of people are using it, right? Then it starts to be decentralized. So like every of these topics is a 3-hour talk, right? But it's very interesting.
But you know what's so fascinating about what Thomas is saying with all the blockchain technology? It's not only about technology here. And when you walk around here, the promenade, or being talking to delegates at the World Economic Forum, you see that it's about power. It's about enabling regions, countries, assets being exposed to a new degree. And I think the first use case of tokenization is really tokenizing money, so digital money. And so when now stable coins, there are central bank digital currencies being discussed. And they're like, when I started diving into Bitcoin and blockchain and everything, I really discovered what is money, what is fiat money. And there's a question to the audience, because this morning we talked about the Black Swan event. So what's the life cycle of a fiat currency? What's the average lifetime of a fiat currency? Any guesses? 30 years. 30 years? Okay, so my number is 50 years around, but short. You know, it's 50 years is like one human lifetime, one generation, maybe 2 generations. It's not very long, right? So, and when we talk about monetary systems, financial systems, how blockchain technology can intervene, it's ultimately about power, about monetary policies, about asset tokenized, and that's so fascinating about this topic. So it's much beyond the tech.
I know we've got 5 minutes left, so I want to get into a security token, because your firm takes a lot of legal risk when you're giving opinions, because people are approaching your organization, your law firm, and saying, we have a utility token. And you got to dive into it to determine what is a security and what is not a security. So talk us through Thomas's brain on this.
I think in Europe, it's actually not that big of a risk, to be very honest. It is a big risk in the United States. And I came up, there's this Howey test in the United States, right? And there's this saying that if it walks like a duck, if it sounds like a duck, it's a duck. So if you come up with a utility token, and but in general, it's actually a security, right? It's still a security. In Europe, and specifically in Liechtenstein, we have quite clear rules what a security is and what's not. So that's one of the easier things we do. We issue legal opinions. We did more than 300 already. No, more than 500 already, actually. More than 300 projects. I don't track them anymore. But so that's one of the easy parts. I think what is really, and that's coming back to the uncertainty part, right? The problem is that if you have a country, and America being one of the biggest, like, right, economies in that space, there is to say, I said that on stage already several times. The example is like, you tell people, and you said that's actually legislation by enforcement. You don't know what the duck is. Nobody tells you what the duck is, if it's a security or not, right? You actually basically have to tear it apart, and that's what they do. They tear it apart, kill the duck, and then afterwards they will say to you, yeah, we knew it was a security. But that's not how you can create businesses, right? You have to have that legal certainty, and I have to look at that duck and say, okay, that's a good duck, that's a bad duck, that's a good duck, that's a bad duck. And that's a problem, right? And in Europe it's very easy, because we have very clear rules. And I think we need clear rules, not only for the entrepreneurs, but we also need it for the customers, actually, I think. So that's really, really crucial.
So, Monty, in the United States, we have casinos, and I think everybody might have them, and they're part of the world as well. But in Las Vegas, you can go in. You can get drunk. They will give you as much alcohol, really, as you want. They will have people walk around to entice you, or at least to numb you in certain areas or make you think in a different way. And then they do not ask you the question of, can you afford this next hand? They don't ask you what is in your bank account. They don't ask you to go maybe complete a form to meet with a financial advisor. They simply don't care. But yet this world of cryptocurrency is, we need to protect the consumer. Well, what about protecting the consumer from themselves when they might have a gambling addiction? Or they might have an alcohol problem, and they're going to a place where they're making bad decisions, and we all suffer from some sort of self-sabotaging behavior. But it seems that there's been this unfair mark on the crypto space, and you run a crypto exchange. So finish this out and talk about it.
Yes. So it's the discussion about protecting the investors or the users. And I believe that we have a very smart crowd out there, and we should rather, instead of blocking them and forcing them to not go into these risky assets, we should open up. And for example, in the US, there's this rule of the advanced investors, accredited investors. So which means that only if you have a wealth of rather $300,000 of income or $1 million of net worth, you're allowed to invest in these like more risky assets. But these are the ones which give you more return. And I don't think that's the right way to do it. We should be opening up and making it more transparent. So what we support with the Liechtenstein rules, and also now with MiCA coming, is bringing in more transparency, more integrity, and more disclosures. So everybody can make their own judgment if they want to jump in this investment, but at least now you are forced to make disclosures. And for example, if you look at many of the exchanges, crypto exchanges out there, do you know who are their shareholders? Where's their office? Who are the directors? You don't really know. And I think these are the basic things which every token project needs to disclose in the so-called basic information in Liechtenstein, like who's the company, who are the people, who do you talk to if there are any problems. And this is like simple rules of transparency. And then beyond that, I think balancing regulation and innovation, the only way to move that forward and to really win in that industry in the future is about integrity. So at our company, we have 3 rules of company culture. One is excellence. We try to do excellent work in everything we do. We have unity, so we unite our community, our clients, focused on what they need. And third is the integrity. So doing the right thing when nobody's watching. And that's where regulation sometimes reaches its boundaries, because there are always people who abuse it, whether it's from like Wirecard or others ones. So this integrity needs to come forward to really move the industry from the roughly 2 trillion, now where we are at 1.8, to 10 trillion and more.
And let me add 3 sentences to that. You said that regulation, and we already have that regulation. I think the biggest thing people or jurisdictions actually do wrong in that space is that they come up with one regulation and then they say, we are good now for the next 5 to 10 years. The reality is that you constantly have to evolve. You constantly have to learn, right? And we, for example, we announced, we started in 2016, released it, actually enforced it in 1st of January 2020, so 4 years after. And now we are in 2024, right? And we have like 14 days left. 1st of February, we already have the revised version of our local act. And then we have MiCA coming this year already. So it's actually constantly evolving, right? So, and you have to be there on time and always analyze the trends, right?
Monty, I think we're out of time. Final thoughts?
So I think as we are in the Greek house, the opportunity for Greece or any other country there who's driven by tourism as a very beautiful country, right? There are many opportunities for entrepreneurs or to open up. I mean, for me, as a now living in Switzerland, it's not so easy to invest in any Greek assets. So in a, holiday home or something like that, it's a complex process. So, and I think that's where the opportunity lies with blockchain and crypto opening up. And I think that's why I also want to congratulate the Greek House here to address the topic. I think big opportunities ahead for the economy in Greece.
And we are happy to talk. Reach out to us. Reach out to the Liechtenstein government. Reach out to our regulator. They're really open for discussions, and we are really open for sharing what we learned. And then we want to learn from you.
Thank you to my panelists and to you in the audience. And joining us on this edition of Blockchain, I think 101. This was fun. Thanks, everybody.
Thank you.